The market is absolutely ripping out of the gate this week. You can see we actually gapped higher and have just been floating to new heights here on the NASDAQ, S&P 500, and the Dow. The Dow rallies 500 points to start the new week on hopes that Trump is softening tariff stance. But the question on many people's minds right now is this just a big bull trap? Meaning, is this big rip here something that we can actually believe and sink our teeth into and look to get more constructively long? Or should we be cautious looking for the big rug pull that might be just around the corner? In this video, I'll be discussing my thoughts on the indices, but I'll also be taking a look at some of the recent moves in the dollar, gold, and currencies. Let's get started. And welcome back to the channel, guys. I hope that you're doing well. I hope you had a nice weekend. If you could do me a big favor as we get started, hit that thumbs up button. It lets YouTube that you want to see more video content like this, and it will start showing up in your YouTube more often. The Edgefinder this week is free access to everybody watching this video. No, that's not clickbait or a false promise. It genuinely is available to the public right now for the full week. All you have to do to take advantage of the free opportunity is click the link in the description to join our free Telegram channel, and then fill out this application form that Julie from our team put together so that you can try out the Edgefinder for a full free week. Now, at the end of this period, please note that this will no longer be available for free, but this is an opportunity for us to let people try the tool, see if they like it, and potentially buy it from us in the future. So don't miss your chance. The Edgefinder free week starts now, goes through the end of this week. The link for the Telegram can be found in the description below. So far, the NASDAQ, the S&P 500, everything is ripping here this morning, and a lot of my buys here from the last few weeks are really paying dividends. We're up about 1.84% on the day. It's a $19,000 day. And again, some context, I've had a little bit of a drawdown here, a little bit of a mixed return so far, but here's a look at my year-to-date returns. So year-to-date, I had a nice start to the year, then kind of gave back some of the gains, but the gold trade and recent bounce back in stocks that I've been buying has really helped to put me back in the green, up about 4.3% on the year. And you can see compared to the NASDAQ, we've had a nice start, holding up a lot better with that gold long trade, helped to really cushion some of the sell-off in stocks. You can see so far this year, up about, like I said, 4.5% or so. NASDAQ is down about 6% this year. So the big question is whether or not we can trust this bounce back in stocks. And I'm going to go out on a limb and continue to say what I have been saying on the channel. And the answer is yes. I am still very bullish on the NASDAQ, S&P. And like I said, with my positioning, my actions ultimately are showing where I fall on the camp of bullish or bearish. I'm definitely believing that we have more upside here for the NASDAQ, especially. Now, again, what I really would like to see, however, before we jump to the conclusion that this market is something that we can trust, is the price action. Let's take a closer look at the NASDAQ. So if we zoom in on the daily chart, you can see that we put in a little bit of a double bottom, and then we found some areas of support, but then key notable breakouts are happening here today where we actually broke back above the 20,000 mark. But hold your horses, be careful here, because if you get a wick on the top, if we actually end up the candle here today looking something like this, that is definitely a rally that I want to be cautious about. That being said, if we close similar to the way that we're closing today, I think there's a very good chance that price action is telling you that this market has bottomed out. Dropping down to the 4-hour chart, we can see this looks even more constructive. We can actually show some areas of support that we just drew on the daily chart. So if I actually go and add these levels, what you can see is that we are now even breaking through some of the key resistance that we chopped around in last week. So in my view, a retest of this area would be an opportunity for me to add even more long positions to my existing large position in US stocks. Specifically on the NASDAQ, I'd be looking for something like this, where essentially I don't really want to see this thing come back and just get stuck back inside of this range again. So I'd probably stop out somewhere around this area, but I could even tighten this and get a better risk reward profile if I tighten it just a little bit here. Really, if we do come back to fill the gap, that's totally fine. But I would take this gap window or this kind of gap open spot as a constructive area of support. We have previous resistance in this area, but if we filled that gap and kept going, that would be a sign for me to go ahead and stop out of the trade and take a loss. So I'm watching the NASDAQ. Like I said, I would love it to just keep going to the upside, as I have quite a few stock holdings. I'll show you those. There it is. You can see I have a whole list of heavy tech stocks like Nvidia, Fortinet, software, IGV, ETF is a good size position for me, PayPal, Uber. I also have a silver trade, which we'll talk about, Home Depot, Intuitive Surgical, Tesla, Salesforce, Amazon, etc. That being said, I do have eyes on a NAS 100 long position. I do think that if I get a pullback on this one today or in the next few days, I'll take that as an opportunity to buy the dip and continue to be constructively bullish. Part of the reason I have been pounding my fist about being bullish on this market is because everyone else seems so afraid of it. We saw the put to call ratio reach extreme levels, showing that everybody is convinced, or was convinced, maybe starting to jump back ship on the other side now, that the market was going to crash. Everybody's so worried about tariffs that they basically sold their shares, and that discount opportunity is something that I stepped in and bought in the last few weeks. The AAII Investor Sentiment Survey continues to show investors are scared, with almost 4 weeks in a row of 55+% bearish respondents on the survey. That shows you where market sentiment is at. Everybody is selling their shares, and in my view, when everybody does something in markets, there's oftentimes some really good risk reward opportunities to look to constructively take the other side of that trade when everything aligns properly. And when I say aligns properly, I am talking about price action. So if you get a pullback, we have the recipe here for a good setup in my view. Take a look at the Edgefinder screen for the NASDAQ, and you can see we're getting a +7 score with the commitment of traders data showing bullishness, retail sentiment, seasonality a good time, trend to the upside, services PMI healthy, inflation data was great, and interest rates are cooling. This is the type of environment I step in and long the NASDAQ. You can see NASDAQ is also getting a +7 score on the Edgefinder, and this is definitely piquing my interest at this time. Now, Nick, what if you're wrong? How do you know it's going to keep going? The answer is I don't. Everything about trading profitably is about educated guessing and proper risk management. So if I take this trade, I'm not going all in and betting the entire account on the idea that the NASDAQ has to continue. I'm going to take an educated guess. If I can get a constructive pullback, I will probably take a long position with a stop loss below structure. And if I'm wrong, and I size up the next trade. We always have to be moving forward, taking educated guesses, but we never know with certainty what the market's going to do next. For all I know, Trump could come out and say something completely against this narrative, saying that tariffs are going to be doubled and tripled from here, and the market could completely crater. But my educated guess is that most people are fearing the worst, and I don't actually think the worst is going to happen with tariffs. So in that case, that leaves me a really good risk to reward to buy the shares that everybody sold. And if we take a look at the commitment of traders data for this week, what we can see here is that positioning in the indices is still pretty mixed. You have NASDAQ at a 58.8%, so slightly leaning. Institutional money is long the NASDAQ. S&P 500 is even more mixed at 56%, and the Dow Jones is at 53%. But in the last week, there was a slight bullish shift here on the NASDAQ, and we also see gold getting accumulated, euro, kiwi, platinum, etc. And on the sell side, dollar weakness continues to be the story, which I actually find to be very, very interesting. A weaker dollar could bring rates lower, which is also bullish for stocks. Here's an updated look at my current positioning. I have longs in silver, IGV, euro pound shorts, and a lot of those stocks that I just showed you. All of these are being live updated in the A1 Trade Tracker, which is coming soon to VIP members. Taking a look at gold here on the 4-hour chart, you can see that level of support that sort of held last week, gave out, and ended up taking me out for a profit on my gold position, is now following through a little bit here. And actually, I really do hope that this sees a bigger pullback on the daily chart, because I've been talking about I still want to be long gold, but would love to get a healthy pullback into an area like 29.50 or so. This previous all-time high breakout definitely looks like an interesting area to kind of fill that gap that occurred, and then look to get long for continuation plays, as long as we continue to have Edgefinder confirmation on the top setups page, which gold is currently getting a +12 score. Also starting to look more attractive is the euro against the US dollar. I've talked about this, but I'm looking for a bit of a false breakout underneath this key level of support, tagging that 38.2% retracement, at which case I'd be looking for long side opportunities on the euro. Pound dollar, same story. We have a really key level of support down here at 1.2775. I am looking for a larger sell-off here on the pound, at which case I think there may be some good risk to reward to get long the pound against the dollar. Part of the reason for dollar bearishness from my part is mostly from the economic heat map. We can see most indicators here pointing towards a weaker US dollar based on the macroeconomic data. Notably, we had cool inflation recently, which is definitely more bearish for the US dollar. That being said, the dollar yen has a little bit of a breakout occurring here this morning. You can see a key level of resistance actually breaking higher for UJ. I have mentioned recently that I've been a little bit more cautious on yen long positions, simply because the Edgefinder score has kind of dried up for yen bullishness, right? So we don't see all of those short ideas for, Aussie yen, dollar yen, etc. on the Edgefinder at this time. So probably just going to sit on the sidelines for now. In fact, look at this. Swiss yen has actually completely shifted to the bullish side. I closed out this trade on Friday for a small loss. I'm also long silver right now. We did get a retest of this key area of support. I took this trade inside of our VIP Discord, and any updates that I make to this position will be shared there for members. And just to give you an idea of what that looks like, anytime I take a position, the full context and breakdown behind why the trade was taken, as well as why I'm putting my stop loss where I'm putting it, why I'm entering where I'm putting it, all that good stuff is shared inside of our Discord. If you're not a member of our Discord and would like to be, there's a link in the description down below to sign up. And if you use the promo code there, you'll get a discount at checkout. If you have any questions, please feel free to chat with us using the first link in the description. And Bitcoin's bouncing back here nicely today. Watching this one close, because if we do get a key break of this trend line here today, that could signal, in my view, maybe the selling is over for now on Bitcoin. So if we get a break, retest of areas, I actually may look for some long side opportunities, as things are looking, in my opinion, tilted in favor of risk on. You can actually see on the Bitcoin to gold ratio a very notable break of this kind of downward structure that we've seen, perhaps signaling that Bitcoin has a little bit of a turn coming for it. Remember that the Bitcoin to gold ratio shows you the demand for Bitcoin versus gold. If this thing is going down, people are selling Bitcoin or at least buying gold at a more rapid rate than Bitcoin, and vice versa. If this thing starts to shift to the upside, that's telling you that the demand for risk on assets like Bitcoin may be stronger. So this, in combination with a breakout in the stock market, make me very optimistic that the risk to reward for a lot of risk on assets makes a lot of sense. It's not a guarantee that Bitcoin goes up, but it's a probability thing that I like quite a bit. And the Russell seems to be holding support around the 2000 level. You can actually see we came down, tagged the round number play 2000 here for the Russell, and a nice push off of this area. This, alongside of the rest of the stock market, looks attractive to me for break and retest opportunities. Oil prices are constructively higher here today, and I'm very curious to see if we're actually going to start putting in a bit of an uptrend on oil. You can see momentum to the downside has faded, and perhaps we put in a low for 65.50. I do think that you actually want to see, if you're somebody who is bullish on the overall market, you don't want to see oil crashing lower. As much as that sounds like a good thing for our prices at the gas pump, the downside to that is that that may actually be signaling recession, as a low demand for oil could be problematic. But if we do start to see this thing constructively range bound in between like the 75 to 65 level, I think that this is a good area for oil to be. It shows you that oil prices are not, completely going to cause tons of inflation, but at the same time, they're not, they're not low enough that they're signaling some problem underneath the surface. Remember that low oil prices help with the story of inflation. They also help the consumer, as of course gas prices are something we all feel in our day-to-day spending. Stronger consumer, because they have a little bit of extra money since they're not spending it all at the gas pump, is a net positive for the economy. Some of our commodity currencies like the Australian dollar and the Kiwi dollar are looking interesting recently. Well, kind of interesting. They're more range bound, but I want to just address this, that if you do see an uptick in China or a downtick in China, these currencies are largely at play. In fact, I had this conversation today with Ivan when we discussed the Kiwi dollar short idea that he's looking at. Check this out. And today's video is sponsored by Vantage. Vantage Markets allows traders outside of the United States to get access to all sorts of markets under one single brokerage. I'm talking cryptocurrencies, indices, commodities. You can even trade stocks on Vantage via CFDs. They also offer a very generous welcome bonus, and the link to that information can be found in the description down below. Thank you to Vantage for sponsoring this video. Now back to the content.
I'm looking for New Zealand dollar short. More like the 57.80 level-ish. So we are a bit like, I don't know, 50 pips away from that. So yeah.
Gotcha. So you were looking for the dollar index come down a little bit, potentially giving you that entry on Kiwi dollar shorts. Got it. Any other ones? Are you looking at euro at all? What do you? That's one I want to ask you about. What about the euro and the pound? Are you interested? Would you short those against the dollar or not so much?
Are you nuts? Like, are you crazy? Like pound? No, pound has been showing a lot of strength because they have inflation at about 3%. Is growing. Yep. They have a bit of a growing economy, more than Europe. Europe, to me, is, well, they had the increase of 800 billion euros into spending. So those are probably my worst ones that I would ever take, because they have a lot of pump, and I don't know if it's pump or dump, but at least a pump of money into it, so that should strengthen them going forward.
Well, Well, that's what I was going to ask you about, Ivan. Or that's why I asked you that, is because those two currencies specifically seem to kind of be having a bit of a revival in strength that they haven't seen in some time. Big government spending on military contracts and flooding into the, anytime you have a bunch of money flooding into the system, it typically, or the idea is that it could cause some stimulus to the underlying economies. So yeah, I like your idea. Like if you were going to be dollar bullish, this is the cool thing about Forex is you can select which currency versus which currency. So if you like the dollar, well, you have the choice now to go, well, maybe I want to go long dollar against the Japanese yen or the Canadian dollar or the Australian dollar. You have these choices. So you like Kiwi specifically. What about Kiwi do you think is more bearish? Do you think their central bank is a bit dovish, or is it the commodity currency concept? What are you thinking?
Just negative growth. I think it is. Is it 3 months, 3 quarters in a row now? Inflation is about 2.2%. Business confidence and consumer confidence is pretty horrible at the moment. So it's just a general state of the economy, to be honest with you. China, if China does well, that would send the New Zealand, Australian higher. But I guess I'm betting that China is going to have a horrible time at the office with the trade wars.
That's a good point too. You can't. The thing about the Australian dollar and the Kiwi dollar, for those who are maybe less familiar with this, is that they are huge trade partners. Well, they're very commodity-centric economies. These parts of the world, they export a whole lot of raw materials. In fact, that's like the bulk of the Australian economy. I think it's the same with New Zealand. They have very similar kind of economies. But the point there that you just made, Ivan, for those not familiar, is that if there's a slowdown in China or a boom in China, these currencies, there's some correlation there, because a strong China typically means a stronger Australian dollar because they experience a lot of growth from the high demand of raw materials, which they provide. And conversely, if there's tariff troubles and China struggles, then we may actually see the demand for these currencies wane a little bit.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.